So this is the vlog for Type B trading, non-aggressive day trading for July 2nd, 2018, Monday. And what a difference a weekend makes. Friday, although it wasn't necessarily a great trading day for me personally, it was a good active day on the market. And at this time of the day, we're about 17 minutes from the open, my trade ideas was just lit up. And now it's got two. AMD keeps kind of poking its head and becomes a third, but I don't think anything else. We may get another stock or two to join them, but it's shaping up to be a down day on the market overall, but not an incredibly active day, at least in the stocks that meet my filters. So right now we've got, of course, DVMT, and I went ahead and put VMware on there as well. DVMT is Dell Technologies. Both they and VMware are up on news that Dell, which has acquired VMware, is converting some of their stock in a bid for the Dell company, not just technologies itself, to go public again. So both are up. The market itself is looking to open down in the futures. Trade war stuff again. Micron, AMD, not necessarily news driven, just have moved. So that's why they're kind of down here separate. I really want my catalyst driven stocks up here, and if I had 6 of them, then that's what would be on my chart. So anyway, we'll see how it goes, and I'll come back later to talk about it. Okay, so it is well after 12. Stopped trading just after 12. And it was a good day. Didn't make a ton of money, but it is a very slow day. I feel like New York is empty. I think everyone's taken Monday, Tuesday off, and those that didn't will probably take Thursday, Wednesday off. So we'll see how this week shapes up at the end, but right now it's seeming very slow. Of course, we noticed there weren't a whole lot of movers on the watch list on the scanner this morning. You'll see on the watch list I added MGM, Las Vegas Sands, and Twitter. They kind of showed up at the last minute before the market opened. Now, once the market opens, that particular scanner is no good. It's measuring based on pre-market volume. So, but these hit, and that's good. And I have other scanners to try to find things through the day, but they're just, there wasn't a whole lot going on. So what we did, first I do want to show you, the reason I say this is a good day, even though it wasn't profitable, is I really try not to define, I'm human, I do it, but I try not to define good and bad days based on the money that you make or lose. You can have a good day where you lose money. You can have a bad day where you make a lot of money. And the reason for that is good day or bad day is, did you trade according to your strategies? Did you follow your plan and your patterns? If you did, then over the long run you will make money. So even if you lost money today, you had a good day because you maintained your composure. So today, I'm human, probably a couple problems, little mistakes, but for the most part, I stayed into my plan, I stayed with my patterns, and I traded the way that we should at Type B trading. So let's start by looking at, actually let's look at Micron. So just want to point out one of the clear patterns, well, clearest that we saw today, was this descending wedge that started up pretty early on with Micron. And Micron didn't really have any news driving it today. It was one of the most active stocks out there. It doesn't have a great range. This isn't taking place along a big money range, so you don't expect to make a bunch of money from Micron, but it's got a lot of market depth. There's a lot of stocks, shares on the bid and the ask size, so even if the volume peters out, you're not going to lose money. You just, you need volume for your patterns to work, and that's kind of what we saw here. So as you can see, we start up in this descending wedge, and so you need 3 points of confirmation along your line here, because you're going to play it long. You expect it to break up, so you need 3 points before you buy in on the third. And so you had 1 point here where it's along this support line. You came up back to the resistance line. You come back down. Now this, it didn't come back up to the resistance line. It come down. It never made the resistance line. So I count this whole stretch as the second test. And at that point, it went ahead and made the upside move that I would have expected. So this just didn't give me that third confirmation that would allow me to enter. The trade obviously was right on the money as far as what I expected to happen, what we expect to happen, but without that third confirmation, you just can't do it. So this is exactly the way I should have played it. No crying over spilt milk. There's no remorse. What you do is you keep going. And so when I kept going, I found MGM. And so MGM, to me, was forming up a bear triangle. So remember, triangles break towards the flat side. So, I could see there was these two support lines, or actually, these are resistance lines. Supports are on the bottom. So these two support lines here, or these 2 points of support here. Now, some people would look at this and say, well, why did you draw a horizontal line? This could easily have been a line like this. Why didn't you draw this? And the answer to that is these are 1 minute candlesticks. And 1 minute candlesticks, I usually like to look at where is the majority, where's kind of the center of mass. And there are more tags kind of in this area than there would be up here where you do have two bodies. But really, you could have drawn this either way. Now, if you'd drawn it this way, now it's a descending wedge, and that you'd expect to break to the up. And you may say, well, that's what it did. Really traded sideways at the end of things. So I had my bear triangle, and again, I'm also influenced by the fact that we gapped down today. So yeah, this is right at the open, maybe momentum's down. Now, volume was pretty low, and you could question whether I should have gone in this trade at all, but I did. So back to it, we came up, we had our third point. I'm going to play this short where it tested the line of resistance. I bought in. I actually went 800 shares in, which, it's about $20,000. And we broke out. We came up, we went back, but as soon as we had the first candlestick that stopped above our line of support, or our line of resistance, which now has become a line of support, I got out. Clearly it's out of pattern, it's going the other way. No, I'm out. And it did just kind of trade sideways after that. So this volume petered off. MGM just is not a good stock today. So I got out, lost a little there. That's fine. Went on to Micron. So coming back to Micron, earlier we had our descending wedge, which broke to the up. Micron had a lot more volume. This is just a better stock to be trading today. Even though it doesn't have the range and price in its movements to expect to make a really good amount of money, this is a good just plug and chug kind of grinding stock today. And it was about the only game in town, so I stuck with it. When these do a pattern move, so when you have a descending wedge and then you break sharply to the upside, if it just kind of peters, this doesn't always happen, but if it breaks pretty sharply, very often what you're going to get is you're going to get a period of kind of consolidation before it breaks to the up again. And it will usually take the form of a pattern. It could be another wedge or descending channel, could be a Dow line, or could be a symmetrical triangle. In this case, it was a beautiful bull triangle. And I love triangles. Triangles are probably my favorite pattern. I think I've said before I've made more money in other patterns, but I love triangles because you know exactly where your stop is, and your stop just kind of naturally tightens because you follow the upward slope of this line. And so the amount of money you're risking never really increases, and you have several opportunities to do little micro transactions in here and increase. So you can work a triangle pretty well. So what I did was I waited for my third point of confirmation on the line of support here. So come down, here's 1, here's 2, and we come up and here's 3. And so I bought in, and I bought in 400 shares right here. And we kind of, tested the line of of support, and this would have been my stop loss right here. As soon as it kind of increased past that last point, it would stop being a triangle. Never did that. And it came up here, hit our line of resistance. Now normally I will sell a little bit at the line of resistance because I want to lock in some profit in anticipation that this is going to come back down and just be another wave. So I sold 200 shares, and it came down, and what I did was, right here it was a slight anomaly. I actually, for some reason, I became convinced that it was about to do its up move. So this is kind of a little period here where I was not on strategy, and I did buy in 200 more shares. Okay. Now, when I came back down here to the line of support, you'll see I bought in even more shares. Now, why did I do that? This actually is part of plan. Now, today we're at a higher share amount than we've been. The goal is kind of to buy in at either a $20,000 or a $40,000 total stake. So on this stock, buying in 400 shares is around $20,000. Taking it up to 800 shares is around $40,000. So by buying in here, what I'm doing is something called averaging up. Now, we don't average down, and by that I mean if the stock drops below our buy-in point, we are not going to buy that. Some people do. It's called averaging losers. Losers average losers. So we don't do that. We will, though, average up, because if we're still in pattern, as we are here, this becomes a good buy-in point, because we know if this continues in pattern, the price will never get lower than it is right here, and it never did. So we bought in now to 800 shares. Now we came back up. We did not sell any shares here. Why? Because at this price differential here between where we bought in and where we sold out 200 shares up here, this was enough to make a little bit of money. It was 20 bucks, you know. That was kind of right at the level. If you couldn't make any money here, I don't want to sell 200 shares. I want to hold on because I know we're supposed to pop up. Here, this is just too small a range. Commissions are going to eat up any profit. So I stayed in. Came back down, followed the lines. Now, I'm only going to a max of 40,000. We don't trade in margin. We are not aggressive traders who say, wow, you know, I've got 4 times my account in margin I can use to day trade. Heck, I could put $200,000 or $100,000 in here and make a ton. We don't do that. That's aggressive, that's stupid, and that will end your trading career. So we stuck with our plan. We broke up here. We went ahead again now because we had some resistance, and we had a strong volume going in. I did sell 200 at the line, and that's, you know, again, I didn't do it here. We never really got the line. Here, okay, you know, again, it became about 20 bucks again. So because we went up a little higher than we did last time, I went ahead and sold out 200. Now, we broke above. So I let it go up. It kind of had trouble making a new high. I sold out another 200. And we kind of went along here, consolidated. So now I'm on 400. And then boom, we come up here. So my target was, of course, the range between here and here. A little under 30 cents. And, you know, here's my setup here. So this is my target line. We came up and we hit it. We got in that area. I sold 200. And then we were clearly kind of going down again. I sold my last 200. So volume, again, even though, you know, this is scaled, it looks like it's high. It's really not all that high. Coming up, it was after 12. Time to get out. Now, it has since then kind of continued to just, you know, go up. But if you look from here, let me move my watch list. If you look from here to here, that's 15 cents. So staying in at this amount of time for 15 cents is not worth it if I was continuing to trade. I'd want to find a different trade. Anyway, I'm very happy with this trade. Overall, this was over $200 as a net. So to go ahead and bring in this, yeah. So that one Micron trade came out about 213. There were some commissions. The loss on the MGM took away with commissions about 93. So 109 on the day, and this for being a very slow day, and my birthday. Happy birthday, me. It wasn't bad. This was what your plan wants. Now, on busier days, this could be a higher loss. Hope you try to lose less than half, and could be much higher gains. So anyway, we're calling this a good one because we followed plan. And that's it. Y'all have a wonderful day, and we'll see you tomorrow.